Turning to another no-brainer is the energy markets. And I know energy is down today, so you can say, oh, well, Daniel, you don't know what you're talking about. It's still higher. It's basically given up a lot of the spike from Russia and things. It's still higher than it was last year, but not significantly in the terms of the war premium, in my opinion, has kind of filtered its way out, Frank. However, we still have a no-brainer in energy, in my opinion, over the long term. And what I want to tell everybody, if you would give me a minute here, Frank and I have the best job in the world. Well, Frank, really, because he's the boss. I have the second best job in the world because I get to be here and do this without all the stress or as much. Yet, we want to provide value. And right now, the easiest, and I think you would agree with me, Frank, not to put words in your mouth, but the best advice right now is to either hide out and play defense or just don't play at all right now. That doesn't mean sell all the stocks you have. It just means keep saving, keep accumulating, keep revising, and looking at where do you think money is going to flow best. I think you have to have a longer term and scale into the energy sector if you're not already. I just simply want, this is like a call to action or a public service announcement, Frank. If you don't have any exposure to energy, please do so. And if you're wrong and you got to give it, a year or let this cycle play out, blame me. That's fine. Because over across the pond, Frank, we've talked about higher energy prices. What's going on in a nutshell? You have central banks raising interest rates, and you have governments continuing to print and flood the money, which is a recipe for disaster because you're trying to tighten and inflate at the same time. Frank, we've talked about, we'll get into greater detail in upcoming podcasts and maybe some issues for newsletter subscribers. In the big picture, you don't need demand for oil to continue to grow at a massive rate to keep oil high because other energy sources like natural gas are spiking, which means utility companies and everybody else is going to look to transition. Frank, can you imagine an irony world where because of the cost of fossil fuels, it'll actually, and renewables, it could also, in California, like places, it could be cheaper to cheaper to buy a gas-powered car and fill it up versus charge it if you look at different utility rates and things, especially over in Europe. That's funny. That's irony. But you have a situation where you're cutting off Russia or trying to sanction it. They can turn off the energy, which is spiking it, which is going to crush the economy from all aspects of Europe. And I don't want to sound like a doomsdayer, Frank. It's just very easy to point and say the U.S. is by far the cleanest dirty shirt, which is why the U.S. dollar, you've talked about that, is going to remain strong for the foreseeable future. But energy, you don't need a reviving economy to keep oil and energy prices higher. That's a significant shift versus your typical boom and bust, in my opinion. The new leader, the new prime minister over in Europe, Liz, or the UK, is basically, I think, is going along with this $150 billion plan to cap energy prices, to offset energy prices for the consumers and things like that. Long and short, that just doesn't work. When you try to price fix an asset, also an asset you don't really control, they don't make their own energy, so that's interesting in itself. But when you try to put a cap on something, not only are you taking away incentive, you're disrupting the capital flows that's going to sustain that over time. Long story short, you have to have exposure to energy. And on days like today, when it's pulling back and we're held hostage at just waiting on the Fed, waiting on inflation data next week, waiting on speeches, that's where you want to reevaluate your portfolio and understand, hey, despite the headlines of today, what tailwinds or what market forces are still in place now and will be in the foreseeable future, and how can you profit off that? The easiest ones are energy. And you can interrupt me now, Frank, and chime in here with me.
The thing with energy is, I said yesterday that it normally corrects itself, right, when it's higher. It's one of the ultimate cyclical markets, right? And it just does. It corrects itself. I will disagree a little bit with the oil thesis because if you're looking at China, demand is getting crushed right now, right? Their economy remains closed. They're the second largest consumer of oil, right? So I think it's whatever it is. It's like 13%, so 13 million barrels, I guess, because we're close to 100 million barrels of total global consumption, and it's fallen off a cliff, right? It's down 20%, and this was April, May, and they're even more closed now, and you're seeing the property market. So, if you're going to see a global recession, it's very rare to see a global recession and oil prices spike tremendously. That's one of the things that worries me about the oil thesis, where, yes, I understand everyone's talking about, the strategic oil reserves and they need to be replenished. I get it. People have talked about that for 3 months, 4 months. I get it. I understand. And, we reduce supply in this whole green bullshit energy initiative where, no more oil ever, let's just, electric cars 100%, it's never like in the middle. Let's go towards electric cars and let the people decide. And let's not tell them that they have to use electric cars forever, especially California with your energy grid, where no one's going to be able to get any place because you're always going to have problems with your energy grid, even 10, 20, 30 years from now. And how are you going to drive? I don't know how you're going to drive if you can't charge a car. That's besides the point. But when I look at oil right now, there's certain things I see, and people are saying, well, oil's a play. Oil's great. The play is uranium. Uranium's a play. And we talked about this, Daniel, in terms of how Europe energy firms, right? These are trading firms, are under pressure. They have margin calls for at least $1.5 trillion, right? Straining their liquidity. This is derivatives and stuff. A lot of this is electric companies. If they're reporting 1.5 trillion margin calls, it's probably at least 25% more or higher than that, right? If that's what they're reporting. Just from experience. And, when you see disasters, they don't report the exact amount. It's usually a lot worse than that. Just like it was during a credit crisis, like it was a COVID, it's a lot worse than what they report, right? Nuclear. To go to nuclear, you're seeing, Germany's going to coal. And you're looking at Europe going to coal now, right? So how many countries are going to coal saying, okay, if you look at nuclear, they have to go back to nuclear. It's dirt cheap, cleanest fuel, 24-hour baseload power. The argument against nuclear is what, Daniel? Why do people not want to use nuclear?
Disasters.
Disaster. They're afraid
meltdowns, Frank.
They're afraid they're going to die, even though it very rarely happens. Fukushima was as bad in terms of, people dying and stuff like that and whatever. You never want to see people die, whatever. Again, that's an isolated situation, and there was a lot of messed up people, even with the control part, even though you did see a tsunami and stuff, right? But, and I always joke around that all the freaking nuclear plants are right on the Ring of Fire, which is where 95% of the earthquakes and tsunamis and all that shit takes place, which is, all right, whoever made that law, whatever. But that's the argument, that you're going to die and these things are going to leak, radiation. However, that's the argument against nuclear, right? It's Fukushima, basically. People are going to die a lot sooner, and it's going to happen this winter if they don't have heat. And we're not talking about even in places in the U.S., where in the U.S. there's places that it's really, 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 really cold. Try to go North Dakota, where you see minus 30 up there. Montana and stuff like that in some areas. It's ice. It's very, very cold. But we're talking about places in Russia. We're talking about places in Europe. We're talking about places they don't have energy. They don't have it. People are going to die a lot sooner. So that's why you're going back to coal, saying, okay, this whole green bullshit initiative, I get it. We want to comply, but we don't want people to die. So nuclear, the cleanest fuel, 24-hour baseload, means it can be turned. It works all the time. You don't need the wind to be blowing or the sun to be out, which people don't talk about, which doesn't happen all the time. So you don't have 24 baseload power. But the argument against nuclear doesn't make sense anymore. It doesn't make sense to the point where, okay, we're worried. Well, you should be worried right now. And also, you're looking at the crazy climate change idiots who hate nuclear. For some reason, they hate nuclear, right? And they also hate natural gas, right? Because it's a fossil fuel. But they hate natural gas, even saying that that's not a clean fuel either, when it's a very clean fuel. This is becoming a joke now. People are going to die. Enough with the bullshit green initiative. You can get back to it when the economy's better, when things are better, the whole freaking woke shit, all that. Enough of it, okay? It's destroying companies. It's killing people. People are going to die because of these initiatives, okay? We have to recognize that. Nuclear is the obvious choice. It's cheap. You're going to see demand surge. Nuclear, the fundamentals look good for 4 or 5 years. What's going on right now, the urgency, this is it. This is the catalyst. You always had it, and I've heard this argument so many times, and I've been in nuclear for a long time, uranium stocks. But if you're looking at oil and like oil, and you think oil, really, I think you're better off with nuclear. That's a better alternative from an investment standpoint. I'm not saying oil can't go higher. I'm just worried about a global recession. When you see a global recession, demand's going to fall off a cliff for everything, for commercial, construction, all this stuff. And that's probably why you're seeing oil come back a little bit. But you're still going to see relatively high energy prices in Europe. It's a disaster, due to Russia. You want to mess with Russia, who controls 40% of your, your energy needs. That's your problem, and that was a stupid idea. And now, look, it's come back to bite you in the ass. Nuclear, to me, is a much better play here, Daniel. I think nuclear, if you're a bull in oil, buy oil stocks, but you should be buying uranium because, it's if you really think oil is going to go a lot higher, for me, I think is a much, much better case for uranium to go higher, and a lot of these stocks. Buy the producers. There's UEC. There's Encore is a company I like. You probably never heard of that I'm invested in. That bought another company that I actually was invested in. That's how I found out by Encore. But if you look at the management team and the assets they have, they're incredible. These guys are amazing. It's under radar play. So you have those are the two names. Uranium Royalty went to this structure where they call it the ATM structure, where it's ATM, so you could automatically issue more and more shares to raise more money. I hate that because you're diluting the shit out of shareholders. And again, I love Amir. He's one of my greatest friends. And I understand for that, you're using that money to buy royalties, but I just hate dilution. And, any Canadian company, it's massive, incredible, unbelievable dilution. Like 20 million shares you'll start with and they'll have $1 billion and the stock will go from 65 cents to 75 cents, but the market cap is like, just went from 80 million to like $1 billion, right? Because that's how many shares, because that's what they do when they want to, acquire companies. It's 100% share purchase, never cash, because a lot of these companies don't have cash on the balance sheet, especially the smaller ones. Nuclear is definitely a play here if you're a believer in oil, I think. And for me, that's what it's about in the stock market, where you could find the greatest idea, always research your competitors, because that's where I found even greater ideas, saying, wow, this is a good name, but these guys are much, much better position. Maybe they have a stronger balance sheet. Maybe they just acquired a company where the stock came down. They paid a lot of money for it, but now the integration's there. That's when you find the best thing. So if you're looking to buy different companies, if you look at UEC, look at Encore. I like Encore a little bit better than UEC in terms of valuation, in terms of the assets, but UEC is great, premier, awesome company that should do very, very well. But there's a lot of names. Cameco is the easiest one to buy that anyone could purchase, which is the large cap and the main producer. But you're going to see a lot of these uranium companies pop up like they did in 15 years ago when uranium was hot, when now they just eliminated the whole industry, right? They're doing mining. But I just think uranium is much better here.